Hey there, traders. Welcome. It's February 6th, 2014, and today we're going to go into our market analysis. It is Thursday, and I will put this one public on YouTube. So if you're watching this off of YouTube and you like the video, then make sure you're signed up to the newsletter because not all of these get released on YouTube. So we'll have a clickable link right on this page that you can click to sign up to get the newsletter, because what I found was a lot of people on YouTube first start out with the mere basics and want the basic videos, and later, if you're serious, then of course you can get these types of recaps. So you want to make sure to sign up to the newsletter if you're serious about your trading, or if you want to get more market in-depth analysis. So today I want to recap some of the things that we talked about last week, and that should be in the newsletter as well if you missed it, to be able to click and see that video. And pretty much a lot of the predictions were right on, but I want to start out with talking about some of the things that I mentioned that we would discuss this week, which would be some of the international markets. And a lot of people ignore these types of things. And if we look at the weekly on the Japanese markets, you can see that here we have this trend line that was created, and now it's breaking lower to the next level. So if we look at it like this, you can see that, we had a healthy trend line and it's been doing pretty well. So it would continue up, and then it would pull back to that trend line and continue up, pull back to that trend line. But that trend line was there. But now what happened this last week was actually that we broke this trend line, which is not usually the best sign. Now, can it come back and retest things and go back up higher? Yeah, of course it can. It can create a new trend line, and it can, create another trend line that's a little bit lower of a steep, something like that. But right now, the point being is that it broke this trend line, and that's something to watch out for. Now, some of the other markets that I'll watch is something like the DAX, which is the Frankfurt Index. Same thing here. If you look at it on the weekly, you can see that right here, we've had this trend line. Again, we were going up. We'll do a little pullback, but it would be on the trend line. Okay? So this is what was happening, but now it broke. And again, something to be weary of, or be careful of, and be cautious of. And the next one that I like to watch is the FTSE. And the reason I watch all these international markets, and I don't really watch all of them in depth like our markets. Typically, I don't watch the indices too much. I will watch them to get a general feel for the market perspective, but I really focus in on my own personal stocks and trades. And as for me this week, like I said, I haven't really traded much. I've been sick because I worked on my book till 4 o'clock in the morning, something that's coming out later. But I have been watching the markets, and I have a couple little positions on which I'll tell you what I have later on. But right here, again, we got the FTSE, which is the London, which closes at right around that 11:30 lunchtime mark. And you can see, again, even when we did go up, we would pull back to that trend line. But now what's happening is this week, it's starting to break. And you can see here on the daily, you can see that it's going past below this level. So it's very interesting to me, and just something to be aware of. I'm not saying it can't bounce, because the market can do anything it wants to do. But when you look at the weekly right here, and you look at what's happening and what's going on, it's kind of what's interesting to me about the international markets. And the way I use them is really I just look at how the market plays, because the market is tied to everything. I mean, it's tied to our markets as well. So the international markets also affect our markets. It's not always going to affect it exactly one-to-one or be exactly the same, but it does have some influence because people do trade in different parts of the world. They trade, things like the bonds, the US dollar. So there's always people trading different things, and it provides liquidity to the general public. So if you're watching things like the dollar index group, you'll know that when the dollar goes up, let's just delete all this. When the dollar goes up, commodities and energy prices, they tank. Our dollar's getting stronger. But you can see here, the dollar is hitting some resistance points here at that level. And when you have the TLT on the bonds, the same thing. If we look on the weekly, you can see that we've had a few areas right here that it's hit, and now it's pulling back. When the bonds are going down, the stocks will go up. If the dollar is going down, stock prices go up. It kind of works inverse wise like that. So something that you really kind of should watch here and there, and you'll get a good perspective of how things react, because if things get inflated in one chart, they can affect another chart. But again, certain stocks, if you're looking at certain stocks, then they can move on their own and do things completely different just because of earnings and other things that are happening. Now, getting into our markets, if you look at the S&P, let's go back to the weekly. I'm trying to show you guys more weekly, because too many people look at this 10-minute junk and 5-minute junk, and there's a lot of machines that trade in there. But looking at the weekly, you can see we're kind of holding right there on this line on the S&P. Okay, so we're holding that area. If we look at the Dow, you can see again right here, this line was created and it's being kind of broken right there. So this is interesting, because if we extend the line further, you can see that it's kind of keeping up with this trend line on the weekly. If we go to the monthly, you can see that the move is okay. But what's interesting is if we go to the rut, and the rut is the Russell 2000, Russell 3000, these indices right here, you can see that we've had this move for quite some time, and we've hit a couple points here when we retrace back to this line, and we've used this line as support. But now, when we had this support right here, now it broke it. It broke that area. And that, to me, is quite interesting, because that shows me a little bit of weakness. And if we go to the IWM, which is the ETF for the rut, you can see the same exact pattern emerging. It's the baby RUT. So this is 109, and if you look at the RUT, this is the 1013. So if you look at the IWM, you can see the volume a lot better. So if we look at this trend, you can see that right here we broke beyond this level. Okay, and this is something to pay attention to. Can the market have a 50% retracement, maybe right around here? If you do a Fibonacci level, you can do something like that and see where it goes. Yeah, of course it can. So if we do something like a Fibonacci, it lands right around this area. But in general, just key levels to watch for. I wouldn't let it affect your trading decisions. I would look at your own personal particular stocks, because stocks will still move independently, and this market right now is pretty much a day trader's market. There's a lot of volatility, because if we look at the SPY, let's delete all the drawings here, you can see that before we've had light little moves here. But then look at over here how much bouncing we're doing, up and down, up and down. Volatility is high. And when volatility is high, option prices get expensive, which means it's a great time to sell option premiums. And that's in fact what I'm doing at the moment. But when you're new to the game and when you're new to trading, you want to be very cautious of this area or this level, because there's a lot of things that are bouncing around. You want to let the markets just set up and digest and let them do their thing until the coast is clear, kind of thing. And we did have a huge rally today. We had, if we look at the Dow, which is what the consumers look at, 187 point run, which is quite good. It said it was the biggest day gain of the year. If we look at the weekly, we can see we're still negative, actually. So it is kind of bouncing today. But what I always say is that one day doesn't make a trend. So this one day right here, this bounce, it could be a dead cat bounce. What you want to see is the next day follow through, and you want to see it on heavy volume. The problem with this, if we look at it on the DG30, you can see that the volume is lighter. Strong markets have heavier volume. Look at this move over here that we've had right here. Okay, it was on a little bit heavier volume than the 20-day. Okay, if we look at this move here, it was lighter volume, and that's what you really want to see, is heavier volume. If we take it out to the weekly, the volume is pointing to the downside. Okay, again, here looking at it, you know, you can compare this to other times of how the market moves, and just look at the volume and what it does. I mean, that's a key telltale sign, is right here. High volume takes the stocks lower. So right here, if the volume is weak on today, it doesn't mean it can't go higher, but it means there's no juice. So it's like kind of a teenager trying to push a car. They're not usually as strong as a bodybuilder, and it takes time. So this one, the same thing. It can still go higher and continue tomorrow, and you can have a bounce on lighter volume. It's not unheard of. But the problem is this lower volume. The better way to look at it is the diamonds here. Look at the volume today and the previous 2-3 days. You know, we had a couple of green bars here. Okay, so it's kind of rounding this area off right here. Okay, so we're kind of in this support level. But look at the volume the last week. Look how heavy it was. It was quite heavy. So what I would think that would happen if we look at Fibonacci, which I don't really do too much of, but just because after a while you already kind of know, you can see that the stocks went up, and right here it retests the 50%. Okay, you can see that we went up all the way over here. Okay, and now we're going back down, and we can go back up and retest right around this 158.67 level, which is this 38.2 area. 50% would be right here, which is where this area is. Okay, so those are some key points and levels, and you can see where the action was. It was right around here. So if we do have this bounce, they can bounce right around this region and area, and then if there is volume, it would go higher. But if there isn't, I would expect it to roll over, and I think it would be healthy if it did, just because, you know, markets don't go straight up, they don't go straight down. So you can see here, as it was going down, took a couple days, and then it rolled back further. Okay, so same thing with the S&P, played around here, rolled over. It can go back, retest this level. So we'll see on the volume, but right here, lighter volume than these volumes. So let's look back at some stocks. I don't want to over evaluate the markets too much. I just want you to understand where we're at and where we're going, that just because we had this one day move, don't get overly excited about it. I didn't enter any positions today at all, actually. I entered a couple last week, and right after earnings on Amazon. And you know, but this one day bounce, wait for tomorrow, wait for the day after, and then if things look better and if things prove to you, then you can get in. So one key point I do want to make is something that you really should be aware of when trading. And you know, I don't want to nitpick on anybody particularly, but I do want you to learn from one another. And I had a question off of my YouTube channel just this week, and I think you should really read it, or at least everyone should read it. So, and one of the reasons why I preach about earnings. So here we had a question. So trading Twitter long position, and I trailed it with my stop loss order at 63.32 at the last trading hours, and it didn't touch my stop loss. So they didn't execute my stop order. The stock continues to trade after hours, and it slides down to almost 8 points down past my stop loss, but my brokerage house didn't execute my order because it's past the time, the trading hours. They told me that they will execute it first thing tomorrow. How come they didn't execute it during the after hours trading? What happens if the opening bell is traded lower? Can I still get out at 63.32? Please advise. And I think it's important to really learn about these these stocks and what happens is, no, if you have a stop loss order, and this is why I say don't trade earnings. Get out before earnings. I talked about this last week. So if you had a stop loss over here at $63 and the next day the stock opens, right here at 50, no, you're going to get out at 50. You might be lucky and you might go up higher, but for everybody, and like I said, I don't mean to nitpick on any one person. I just think it's a good learning experience for everybody to learn from. Don't play earnings and don't trade the earnings. If you got into Twitter over here, at the $40 mark and you sold maybe half over here at the $70 mark and you still had half remaining, maybe you would have sold another quarter here and left 10% of your shares and took a chance at the earnings. But you see what happens with the earnings is they burn you, and that's not something you really want in your portfolio, because there's nobody going to be there to buy it at the 63 level. So again, I'm going to preach to you guys, don't trade the earnings. Now, some of the things that we talked about last week, we talked about Ralph Lauren, and we talked about it right around here. And remember what I said, stock is toast, get the jelly. Toast, moving down right here. We talked about it right around this, even if it popped, continuing lower, heavy volume this time. Got a little bounce, okay, whatever. No big deal. Okay, so WCC, same thing. Remember what I said, stocks don't go straight down. We talked about this one right around here, I think. Went even further again. So see, this trend line got broken, stock continues lower, and this is what you want to watch for. We got the precision parts, same thing. Okay, stock broke this trend line. It's having a decent bounce here, but as you can see, we talked about this one right around here, went lower. You could have sold another half here, and now it's bouncing off of today's action. We talked about the MDVN, and I told you about this one right when it was trailing higher, and you can review the videos. It's on the website. I can't change it, so can't lie about it. I said that the gap would probably fill, and this is what happens. The gap got filled. Okay, now where it goes from here we'll see, but this is stuff to be aware of. We talked about Facebook last week. Facebook right now is consolidating after earnings, and it's healthy. Let it do its thing. Let us do its business right here. Just like during this time, look, consolidation period from mid-December to January. So it's a month and a half. And now if we get that again, consolidation period, it would be healthy, and then it can continue higher. But your entry on this would be the high of 63.77, so 63.84ish or so, 63.80. If it's on heavy volume, you could play it on a bounce here if you wanted to, but be careful of this gap. It's still there, can still get filled. So again, just something to be aware of. We also talked about ARWR. I talked about this one, saying look at the pattern, and look what happened this week. The pattern's emerging. It's trying to pop higher, but we'll see if it continues. This is why if you bought shares down here at this level, okay, here was our pattern. We bought it at the breakout right here. We would sell a little here, sell a little more here. Okay, stock retraces 50%, okay, give or take. So let's say from here to here. Okay, we went here to here. Let's try and zoom in. Okay, you can see 38.2% retracement. Okay, A to B, B to C. Okay, then it continues higher. Okay, so let's delete that. Again, we go here to the high. Okay, we can go right here. Okay, and you can see right here, retracement to the 61.8, 50% right here, right around that area. And again, it's doing the same thing. Stocks typically repeat patterns. The hard part is always our own personal psychology behind trading. So I just want you to be aware of what we talked about last week and what's going on. Now, some of the things that you should watch and be aware of for tomorrow is we do have that jobs report that will be coming out. So be patient and don't trade anything until the jobs report comes out, and let the market digest. Give it 30-40 minutes for it to digest. Now today we had some action with the Green Mountain Coffee. Again, it peaked up in the morning and it started to sell off towards the end of the day, just because when stocks gap up, typically they try to fill that gap. So you can see it here, but the news was positive, and you can see that it gapped up in the morning, and there was the reaction. Okay, sold off, but it was great if you were in it earlier. So you can see it was building the previous day. Okay, we had the Akamai. Same thing, popped. This one continued higher. You want to see a follow through the next day, so that's what I would watch, is wait for the next day. Then we had, let's see, played around with this one, TDW. So I wanted to share this one because you see here how things consolidate, okay, and then they break lower. We talked about Ralph Lauren. Yeah, we already talked about that one. LVLT, okay, breaking this trend line, moving higher. Second day, follow through, heavy volume again. Look, cause and effect, right? Got this declining trend line, broke past it, heavy volume, stock continues higher 2 days in a row now. Okay, keep an eye on it. It might retrace now here. You don't want to chase stocks that are up so high. Your entry point could have been right here to see it and move higher, or it could have been right here and peel some off into strength, and you have to use something like right around this 34 level as your stop. And then we got the P10 right here. You can see this consolidation pattern. Okay, takes time for things to consolidate, and look at what happened. Broke out, heavy volume. Okay, some of the big boys, what's happening with Priceline, for example, you can see that it's holding the support right around this level. So it's moving in this range. For me, I was trading Amazon actually, and I talked to you in the video towards the end last week, which again, you can watch and verify that I said it would probably fill this gap. And that's what it did. And I said it could bounce, and it's bouncing. And where I'm looking at that it might bounce right around here to the 360 level. Now, actually, in this trade, I have a little bit of a losing trade personally, and I'm using this right here as my stop. So I'll be using this right here, giving it with a $2 move for confluence. So I'll be at the 357 range as the stop. But this is what you want to do and you want to watch, is pretty much the stuff that we talked about last week. You can see how things are unfolding. You can see how things evolved from the stock tumbling after earnings. Okay, you can see how it continued for multiple days. Okay, retested this low and filled this gap. It's exactly what we talked about. Bouncing on it. It may retest here. Okay, the reason I say it may retest, because stocks don't go straight down. Look at all those other examples. Retest here and then roll back over. And why do I say retest? Because look at what it's going up against. Lighter volume here. To be able to surpass this tick, we had 10.3 million shares. You could see that over here on the left. 10.3 million shares traded. So it needs to pass that, and we've only had 3.3 million shares. So it's been going up on 3.3 million shares, but we had 10.3 to the downside. So, what's it telling you? It's going up on lighter volume, and I will evaluate it here on the 30 minutes as well when I do these types of things. So again, the reason I'm using that with a couple dollar stop is you can see right here, on this level, okay, stock was going higher, but it retreated on 560,000 shares. Okay, didn't make it, didn't break this point with 560,000. Okay, it tried it again today a couple times. So over here, 345,000. Does that beat the 560? No. Okay, then 197. No. 166, no, it's retreating. And then right here, we're finally surpassing it with 494 1,000 shares versus the 560. So can it go higher? Yeah, it can. Would it be on lower volume? Yes, it would be. So you need to play the game accordingly when you're trading these types of stocks, because these stocks move quickly, and the larger stocks like this one, like the Amazons, like the Googles, like the Pricelines, you have to give them more wiggle room and more movement. So maybe even $1 or $2 just in confluence. So for me, I give it, what did I give it? Amazon, I gave it when I got in it over here, and I did a spread. So it was a iron condor spread, actually, because volatility increased, the stock went down. So I did a spread, and I got in it right around here. And, I gave it quite a bit of room. I gave it a 15-point run on either direction. 15 points, okay? So you need to, when trading these big stocks, I love the movement and action of them, but you need to give them more room to run when trading them. So in either case, that's kind of the market. That's kind of the recap that I wanted to do today. So looking at the overall market, just be weary of this one-day pop. See what happens tomorrow. See what happens with the job report tomorrow, and see how the market digests it. Whether the number is good or the number is bad, you want to see how the market reacts to it, because it could be a great number, but the market sells off. So that's what you want to watch when the number comes out. So this one day, it doesn't excite me because the volume is not really there. It is more than, say, over here, but it's not anything exciting. So be weary, wait for a follow-through day. If tomorrow things seem to move up and people are buying into the weekend, then you might see a further bounce, or for it to retest levels maybe up to here again. But for now, because it's still Thursday, let's see tomorrow the action, and wait for tomorrow's action and see how the market reacts. If it's a move on higher volume, that's what you want to see. Okay, I hope that was helpful. Again, if you didn't get the recap with the newsletter, or get notified when this video was released, then just be sure to sign up to the newsletter, so that way you get these recaps in the future. And each day I'll try to cover something specific within the market, or at least give you some sort of knowledge so that you can learn to kind of create your own trading system and develop your own skills. Because ideally what I'm trying to do is make sure that you learn on your own rather than relying for me on trades. So I'm trying to make sure that you learn to think slightly differently, because if I constantly sent you out tweets of what I'm watching and what's happening in the market, you'll never be successful on your own. That's exactly why most people get burned out, and that's exactly why most people lose in the market, is because they never rely on themselves, they rely on other things. So here, sign up to the newsletter if you didn't get the newsletter alert for this video. Now, one thing I do want to do, maybe sometime in the future, is do some live calls, whether it's through a Google Hangout Air or maybe a webinar series. And we'll start doing those maybe more often sometime in the future when time allows. But for the time being, if you have questions about a certain specific stock, probably the best way is you can send me an email or maybe even a Twitter message to my account. And I'll just log that in, just try and do it, right before lunchtime or something like that by Thursday, so that way I can get a chance to take a look at it and make sure I put it in the video. In either case, that's the recap for today. I hope you enjoyed it. Trade them well, be careful, and be disciplined. Trade with confidence, watch the volume, and keep learning. Keep learning every single day. Keep stretching your brain and your mind, and if the market is not doing well for you, then you're saying, hey, I wish it was easier, rather than saying that, instead think of it, I wish I was better, so learn to improve your game and constantly improve. Don't hope for things to be easier. Instead, hope for you to be better at the game. Okay, I hope that was helpful and motivating. Enjoy your weekend, and have a good rest of the week.